Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial world and uncover the real stories behind your favorite companies. And today we have a doozy from Tidal Trust III, a semi-annual shareholder report that is packed with numbers. Now this report covers two exchange-traded funds, or ETFs. The N-CSRS Large Cap Diversified Alpha ETF, also known by its ticker LGDX, and the N-CSRS Small Mid Cap Diversified Alpha ETF, that's ticker SMD. So get ready for some serious financial deep dive as we try to understand what made these funds tick over the last 6 months. First up, the report breaks down the costs associated with a hypothetical $10,000 investment in each fund since they were launched. For the N-CSRS Large Cap Diversified Alpha ETF, the cost came out to a mere $11 for a measly 0.25%. That is pretty good. Now, for the N-CSRS Small Mid Cap Diversified Alpha ETF, it was a slightly higher $15, still a very reasonable 0.35%. This tells us that these ETFs are quite cost efficient, which is a big plus for investors looking to keep more of their returns. Let's look at some key statistics as of July 31st, 2025. The N-CSRS Large Cap ETF was valued at just under $100 million, nearly $99 million to be exact, holding 240 different investments. The total advisory fee for managing all that was around $79,000, and the portfolio turnover rate was 43%. That means they bought and sold about 43% of their holdings in the period, showing a decent amount of activity. For the small mid-cap ETF, it was valued at over $81 million with a much larger number of holdings. That is 549. That is a lot of companies. The advisory fee here was a bit higher at almost $89,000, and the portfolio turnover rate was a higher 61%. This suggests the managers were more active in this fund, perhaps looking for more opportunities in the smaller and mid-sized companies they invest in. Now let's see where the money was actually invested. For the large cap ETF, technology grabbed the biggest slice at just over 30%, followed by financials at 13.6%, communications at 12.7%, and consumer discretionary at 11.7%. Healthcare also made up 8.5% of the investments. This shows a clear bet on growth sectors. Interestingly, sector like consumer staples was only 5.1%, energy was 3.6%, and utilities was also 3.6%. Real estate and materials were even smaller slices of the pie. Moving over to the small mid-cap ETF, the sector breakdown shows a different story. Financials lead the pack at 18.6%, followed closely by industrials at 18.3%, and consumer discretionary at 15.4%. Technology was also significant at 12.8%, healthcare came in at 9.4%. Here, communications was a smaller part at 1.7%, and utilities was even smaller at just 0.7%. This distribution hints at a strategy potentially focused on more established sectors with some growth exposure. Now let's talk about the big players, the top 10 holdings for the N-CSRS Large Cap ETF. Predictably, we see the tech giants. Nvidia Corporation is leading the pack at 7.9% of the fund's assets, followed by Microsoft Corporation at 5.3%, Meta Platforms Incorporated at 4.8%, and Amazon.com Incorporated also at 4.8%. Apple Incorporated is next at 4.4%, then Broadcom Incorporated at 3.2%, Netflix Incorporated at 2.4%, Tesla Incorporated at 2.1%, Adobe Incorporated at 1.9%, and finally Progressive Corporation at 1.7%. These are all very well known and dominant companies. For the small mid-cap ETF, the top 10 holdings paint a picture of small and mid-cap companies that are performing well. MCore Group Incorporated is at the top with 2.5%, followed by Interactive Brokers Group Incorporated at 1.9%, Tenet Healthcare Corporation and Jones Lang LaSalle Incorporated are both at 1.3%. Sprouts Farmers Market Incorporated is at 1.2%, Jefferies Financial Group Incorporated and DT Midstream Incorporated are both at 1.1%. Universal Display Corporation and Exelixis Incorporated are both at 1%, and Antero Resources Corporation rounds out the top 10 at 0.9%. These are less frequently discussed companies, showcasing the diversification aspect of this ETF. A key piece of information here is that on February 27th, 2025, the Intech US Enhanced Plus Fund, LLC, which we will call the predecessor fund for simplicity, reorganized into the Intech SWP Large Cap Diversified Alpha ETF. This means a whole other investment entity was essentially merged into this ETF. For accounting purposes, the cost bases of investments from the old fund were carried forward. This is done to make sure that the reporting of gains and losses aligns with what shareholders would pay taxes on. Effectively, it's a way to ensure continuity for tax purposes after a merger. It seems that with this reorganization, there was also a change in their auditors. Tate, Weller and Baker were approved as the fund's new independent registered public accounting firm. This kind of change often happens after a significant corporate event like a reorganization. Now let's dive into the actual holdings. Looking at the Intex SIP Large Cap Diversified Alpha ETF schedule of investments, we see that as of July 31st, 2025, common stocks made up almost all of the fund's investments at 99.6%. Within banking, they held significant positions in Wells Fargo and Company worth over $1 million, and JP Morgan Chase and Company. In consumer discretionary products, Tesla Incorporated stands out with holdings valued at over $2 million. General Motors Company also has a substantial position over $1 million. In financial services, Goldman Sachs Group Incorporated had holdings over $1,272,000. And American Express Company was also a significant holding. The healthcare sector shows Eli Lilly and Company as a major investment with holdings over $1,454,000, and United Health Group Incorporated also over $984,000. The media sector is quite concentrated with Meta Platforms Incorporated at nearly $4.8 million and Netflix Incorporated at over $2.4 million. Alphabet Incorporated Class A and Class C combined are also a huge portion of this sector. In software and tech services, Microsoft Corporation is the largest holding at over $5.2 million. Salesforce Incorporated is at over $1.1 million. And finally, for the large cap fund, tech hardware and semiconductors is the largest sector chunk at 17.2%. Nvidia Corporation is the clear king here with holdings over $7.8 million. Apple Incorporated is at over $4.3 million and Broadcom Incorporated at over $3.1 million. Beyond stocks, there was a small position in a money market fund, the first American government obligations fund Class X, valued at over $364,000. This is typically used for liquidity purposes. The total investments for the Intex SIP Large Cap ETF were valued at nearly $99 million. Now, for the Intex SIP Small Mid Cap Diversified Alpha ETF, common stocks also made up 99.6% of its investments. In banking, the holdings are spread across many smaller banks. First Bancorp Incorporated had a significant position over $621,000. In this sector, PVH Corporation had holdings over $516,000, Scott's Miracle Grow Company at $429,000, and YET, iHoldings Incorporated at over $586,000. For consumer discretionary services, Upbound Group Incorporated is a notable holding at over $258,000. In financial services, Interactive Brokers Group Incorporated is a very substantial holding at over $1.5 million. Jefferies Financial Group Incorporated also has a significant position at over $869,000. In the healthcare sector, Exelixis Incorporated is the largest holding at over $810,000, and Tenet Healthcare Corporation is also a very large position at over $1 million. In industrial products, Muller Industries Incorporated has holdings over $543,000, and Vent Electric PLC is over $290,000. Industrial services seems to be a major focus for this fund, especially with MCOR Group Incorporated as the largest holding at over $2 million. Comfort Systems USA Incorporated is also a significant holding at over $655,000. In the insurance sector, Renaissance Holdings Limited is a substantial holding at over $346,000, and Reinsurance Group of America Incorporated is over $581,000. Materials sector sees impressive holdings in Carlisle Companies, Incorporated valued at over $656,000, and Materian Corporation at over $374,000. For retail and wholesale staples, Sprouts Farmers Market Incorporated leads with over $1 million. Casey's General Stores Incorporated is also a strong position at over $312,000. In software and tech services, KBR Incorporated stands out with over $613,000. Science Applications International Corporation is at over $525,000. For tech hardware and semiconductors, Universal Display Corporation has a significant holding at over $837,000. Interdigital Incorporated is also a strong position at over $655,000. Interdigital Inc. is a patent licensing company, so that is an interesting play. Transitioning to the statements of assets and liabilities, as of July 31st, 2025, the Intex CP Large Cap Diversified Alpha ETF reported net assets of over $98.9 million, while the Intex CP Small Mid Cap Diversified Alpha ETF had net assets of over $81.2 million. These numbers appear healthy and stable for the period. Looking at the statements of operations, we can see how the funds performed. For the Intex SPEEP Large Cap ETF, its net investment income was over $272,000, but the real story here is the net realized and unrealized gain, which was over $7.9 million. This dwarfs the investment income, showing that the fund's value grew primarily through stock appreciation, rather than dividends or interest. For the Small Mid Cap ETF, net investment income was a bit higher at over $276,000 from operations. However, its net realized and unrealized gain was around $6.1 million. Still a significant gain, but less dramatic than the large cap fund in this reporting period. This indicates that the large cap fund did exceptionally well in terms of capital appreciation, likely driven by those big tech names. The statements of changes in net assets show where the money came from and went. For the large cap ETF, subscriptions, meaning money invested by shareholders, were nearly $98 million, while redemptions were just under $7.4 million. This resulted in a massive increase in net assets from capital transactions, showing strong investor interest. The total shares outstanding for the large cap ETF increased by over 4.5 million. For the small mid cap ETF, subscriptions were over $83 million and redemptions were nearly $8.4 million, also leading to a substantial increase in net assets. Now let's look at the financial highlights, which give us a per share breakdown. For the Intex SIP Large Cap ETF, the net asset value per share grew from $20 to $21.64. That's a total return of 8.2% for the reporting period. The ratio of expenses to average net assets was 0.25%, which aligns with the cost disclosure we saw earlier. For the Intex SPEEP Small Mid Cap ETF, the net asset value per share went from $20 to $21.38. That is a total return of 6.9%. The expense ratio here was 0.35%, also matching earlier disclosures. The portfolio turnover rate was 61%, again indicating more active management. It's important to note that both funds commenced operations on February 27, 2025. This means this reporting period is relatively short historically, covering just a few months. The reorganization of the Intex UV. Enhanced Plus Fund LLC into the Intex SP Large Cap Diversified Alpha ETF was effective around this time. This reorganized entity is what we are seeing the financial performance for. The report explains that this reorganization was a non-taxable event for shareholders of the predecessor fund, meaning they didn't owe taxes on the transfer of their assets. The cost basis of the investments carried forward from the predecessor account was over $12 million, but their market value was over $17 million, showing a significant unrealized gain at the time of the transfer. This is a common way to consolidate funds and streamline operations. Now let's talk about risks. The report mentions index concentration risk. This essentially means that if the index a fund tracks is heavily weighted towards a few big companies, and if that fund can't match those weights for some reason, it might not perform as well as the index. Given that these are large cap and small mid cap ETFs, this is a standard risk to be aware of. There is also market capitalization risk. For large cap companies, it means they might be slower to grow compared to smaller companies. And for mid cap companies, their stocks can swing up and down more wildly than larger ones. It highlights that investing in companies of different sizes comes with different potential rewards and risks. The management fees are quite interesting here for the Intex SPEEP Large Cap ETF. The advisory fee is 0.25% for the Intex SPEEP Small Mid Cap ETF. It is 0.35%. The report states that out of this fee, the advisor pays for most of the fund's operating expenses. This is called a unified fee structure, and it means shareholders don't see a long list of separate fees, simplifying things for them. So, what is the verdict on these two ETFs based on this semi-annual report? For the Intex SIP Large Cap Diversified Alpha ETF, it seems like a solid performer, especially with the huge gains driven by the tech sector, and its cost efficiency is a big plus. The reorganization also looks to have gone smoothly from a financial reporting perspective. The Intex SPEEP Small Mid Cap Diversified Alpha ETF also did well, showing diversification across many companies and benefiting from active management as indicated by its higher turnover rate. The financial services and industrial sectors appear to be key areas for this fund's growth. Overall, both funds appear to be managed effectively with a clear strategy and reasonable costs for investors. It is important to remember that past performance, especially for funds that have only been operating for a few months, is not a guarantee of future results. But based on this snapshot, Tidal Trust III seems to have launched these ETFs on a positive trajectory. Alright, that is our breakdown of this semi-annual report. What is your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community linked in the description below for even more insights and discussions. Thanks for watching, see you next time.